Hello everyone, welcome to this initial video about our Bitcoin bull market cycle, where we're at and what we can be looking for. Now I wanted to show you a few things on my long-term Bitcoin chart here. We've got mapped out several of the cycles, and you can see here this purple line, the pink line at the very top, the horizontal line, that's our prior all-time high. And then these light blue lines that you'll see on the diagram are the bear market swing highs. So those are consistent throughout all the cycles. And then the halving events are marked by this vertical dotted pink line. This orange line is our 120-day simple moving average. And as we go through this chart, you're going to see why I use the 120-day simple moving average as a key level. So currently in this bull market, we've been in 195 days and we're up 120%. And this is a stronger start than the last bull market. And there's a couple of potential explanations for that, of course. But I just wanted to show you where we're at. We've obviously blown through the prior swing high and we're approaching the all-time high. Now let's take a look back at last market cycle and let's see if we can glean a few things from that last market cycle. So here we are in the last market cycle, and you can see by this point in the market cycle we weren't quite as high as we are currently at the same juncture. However, what we can learn from looking at the last market cycle is this orange line here gives our 120-day simple moving average. And what I've done is I've measured the separation from the 120-day simple moving average, and we had separation events of almost 40% and then 30% and then later 50%. Now notice every single time we separate more than 30% from the simple moving average, we get into a dangerous territory where we're approaching a sell-off and a return to that moving average. The reason I use the 120-day simple moving average is it has by far the most touches, the most returns to that line of any of the moving averages for a bottom of that sell-off. So in this last cycle, what we saw happen was we saw us approach but not quite hit the prior all-time high and then get a quick rejection back to the prior swing high. So we actually sold off to somewhere between the 120-day moving average and the prior swing high. And then we made our approach again, and after fighting off some resistance, broke above the prior all-time high and then again broke down, fell a little bit below the 120-day moving average, broke back above it, and then continued on. So it took some time, some battling with that prior all-time high. We had an initial rejection right before it, we broke it, and then we broke down, and then battled with it, and then finally the breakout. So the distance between here and here was several months. So we're likely looking at a couple of month battle between trying to break this and actually breaking through. Now, of course, we could this cycle skip this phase here and go ahead and break through here, but we're likely still facing a rejection with as big of a move as we'd have had. And so let's go back to the current cycle, and I want to show you the separation that we're currently at. You look at how we measure this here, the 120-day moving average. We separated 23% here, which doesn't seem like a significant separation, but then we came back and we tested that 120-day SMA for quite a while. And then we started to pull away from it in this last phase. Currently, we've separated some 55% from the 120-day simple moving average. Now, every single time on my chart, we've separated, and this is back to all the bull markets, more than 50%, we've come back to test that line not too long after. So I don't see a time when we've separated 50% and then maintained those gains without some losses in the whole chart. A couple of the things I wanted to show you was a couple of possible reasons for a stronger start to the bull market. Obviously the macroeconomic situation. So if I overlay here the DXY, we see the last bull market cycle, the dollar was very strong and the macroeconomic situation was very different than it is today. So that likely was why we had a slower start to the bull market. But obviously we see here that about halfway through the bull market we had some events that caused a lot of weakening in the dollar, and this weakening may have helped propel the bull market in the second phase much stronger. So we can possibly expect to see a stronger start to the bull market in this phase because we see obvious dollar weakening for a lot of macroeconomic reasons. And we see a very strong start to this bull market. So there seems to be some correlation with macroeconomic events as we study the bull and bear phases here, juxtaposed to the strength of the dollar as a general measure of the strength of the economy. Now, also last market cycle, I wanted to show you some things that happened with our Ethereum ratio. So Ethereum being a good proxy for altcoins, we can kind of learn some things here as well. So let's take a look and let's overlay first Ethereum versus the US dollar. And you'll see that when you really look at this, Ethereum was pretty beat down until it was somewhat apparent that Bitcoin was in a bull phase and was going to take out this all-time high. And then the mania really started right through here as it became apparent that Bitcoin was going to take out this all-time high, and we see a significant increase in the cost of Ethereum. But it did trail for quite a while. Now, if we zoom really into where we are in this cycle, you'll see that we had a good run. So Ethereum went from $7 all the way up to $11. It's a pretty significant move, really. And then it kind of flatlined for a while, and it sold back down to about $10. But it held pretty strong throughout this Bitcoin sell-off. And then when Bitcoin finally broke the prior all-time high, right through here, you see it breaks the all-time high right there. And then it breaks through and holds it. So when we really break through that all-time high for the first time, that's when Ethereum really starts to ramp. And then when we actually broke through, that's where Ethereum ramped. Now let's look at the ratio, the Bitcoin to Ethereum ratio here. I have this in purple. And we see something similar. We see that as Bitcoin approaches its prior all-time high, Ethereum is bleeding a lot of the way here. And then Ethereum starts to gain some steam. And as Bitcoin sells off, Ethereum will hold its ratio. And then right here, after it's apparent that Bitcoin has taken out its prior all-time high, that's when Ethereum really started to gain traction. And then we see a huge gain in Ethereum. So we can likely look for that to happen again. The alts should pump a little bit here. We're going to get a sell-off at some point. It's just a matter of, do we go ahead and take out the prior all-time high and then sell off, come back to that 120-day SMA? Or do we do a similar pattern of failing to break the all-time high, coming back to test the swing high, breaking the all-time high, coming back to the 120-day SMA, and then fighting with the all-time high and breaking it out? I favor that we're probably going to come back and test our prior swing high at some point. It would be somewhat unhealthy if we did not come back to test the prior swing high. So my eyes are very much fixed on this level right here. I believe that we do come back to test that at some point. Now the dynamics of it may be different because of the macroeconomic situation. We'll have to just see how that all plays out. All right, I flipped over here to my Bitcoin chart, and let's just see where we're at. Again, I'm going to remove this SMA line here. So we've obviously made a very strong run. This has been a very parabolic move. And what I'm watching for, I've been watching for a rejection somewhere in this range, just south of our prior all-time high. I've got it marked out here. I'm watching for a rejection up here. So I've been expecting us to actually spike up into here significantly and then get rejected, but we're starting to form possibly an ascending wedge sort of pattern here. And so we may get a breakdown. We may hit this once or twice more and not get very far into it and then break down. We could go ahead and head up into this area and then break down. I'm not sure exactly how that's going to play out, but we're definitely looking like we're trying to top here a little bit, in my opinion. And if we go down to a really low time frame like the 1 hour, you can see that the market took off and never really got a good retest of that swing high level. We were only 500 points from it here, but that's the market's going to want to come down and significantly retest that level, I believe. And then lastly, I want to take a quick look at the Ethereum chart. Obviously, Ethereum's had a great run. Let's put on our Ethereum BTC overlay here. We can see the same kind of pattern emerging, that Ethereum is firming up versus BTC, but it's had a lot of losses. So we peaked out here versus Bitcoin back in September, and we've had a significant loss. So we're actually only bouncing back, as far as the ratio goes, a percentage of that loss. So we're likely coming into resistance on both the ETH BTC and the Ethereum USD chart. And I'm on the Ethereum USD chart currently. And I see that we're coming into some major resistance here on this trend line, and then the 620 resistance above that. I really think that we're probably going to firm up here and consolidate probably in this range. I would say between 620 and 488. We'll probably come back to test 488 at some point, but I could be wrong. We may just firm up here between 600 and say 520. But I really don't see us continuing to blow past these major resistance levels at this time. All right, well, that's all that I had for today. Thank you, guys.